Hey, thanks for joining us for episode 3 of our podcast called Restorative Divorce with the law firm of Aaron Birt. My name is Aaron Birt. I'm the attorney and mediator at the firm.
Hey, my name is Tyler Birt, and I'm the paralegal at the firm.
And you also have an accounting degree, don't you?
I do.
So finances are your thing.
It's right up my alley.
Cool. Well, what we do here at Restorative Divorce is we try to connect the emotional, financial, and legal so we can help you restore yourself post-divorce. And today we're going to focus on the financial aspects of the divorce process. And what do you do when you're divorcing with a lot of debt?
Right.
And that's a really scary situation that I think a lot of people face.
Yeah, and it comes up a lot.
It really does. So much so that there was a joke floating around on the internet, and I'm going to say it right now. Okay, so what does a hurricane, a tornado, a fire, and a divorce all have in common?
What's that?
There are 4 ways to lose your house.
It's very, very true.
And awful, right? I mean, those other things are just, you can't control it. And it's just horrible to think about losing your house. But I think in a divorce situation, that's your go-to. You're really scared about losing the things you've accumulated. And so today we want to talk about divorcing with debt and maybe some options about what you can do and what are the risks that you face when you're divorcing with a lot of debt.
Yeah.
First and foremost, when I start working with somebody that either has no idea about their financial circumstances or they are the person that managed the household finances, I encourage them and ask them to run a credit report. And I do that for a couple of reasons. Mm-hmm. I think you can get a lot of information about your financial circumstances and maybe even your financial well-being. And not enough of us probably run our credit report. We don't run it often enough. But when you're starting the divorce process, a credit report can help in many ways. It can help you learn more about your financial circumstances. It can help us as your team members working with you to identify, are there any problems out there? Or even just see a summary of what accounts are open, what credit cards are out there. Are there things that we need to look into further because you had no idea that maybe your spouse had opened a credit card and run up thousands of dollars of debt? So the first thing I like to do is tell people, before we even get started, have you run a credit history report? And if you haven't, can you go ahead and do that and tender it to our office? We obviously keep that private and confidential, but it's a really good starting point before they even start gathering documents and tendering documents to us. It can really point us in different directions.
And these days, it's really easy to run your credit report, to get a credit report. Back in the day, nobody knew how to do it. And it was very secretive about credit reports. But, as they've changed laws, they've changed rules, you can have like a daily summary of your credit kind of, and then I think right? It's, yeah, mm-hmm. But I think it's once a year or so, you can get a free full report from the 3 credit union, credit reporting agencies, for free. So it's not as hard as it used to be. Like, I think back in the day when we would ask people to run their credit, they didn't know what to do, and luckily these days they can go online and do it. You don't have to call anybody, you don't have to do anything. So,
yep.
So it's useful, but you're right. It's a very good starting point for asset and debt.
Yeah. I mean, and hopefully we avoid some unwanted surprises, or hopefully there are no surprises And, you know, we at least use it as a starting point to determine and identify what debt's out there, what assets are out there. So I think it's a really good starting point for anybody listening. If you haven't done it in a while, run your credit report, keep a copy of that. We would like to see it. Any attorney or mediator you work with may want to see it as well. Yeah. And it can help keep you organized. A lot of what you accumulate during a marriage, it can be an asset, but usually it's tied to a debt as well, right? So you've got your house. Most people have a mortgage or, line of credit or a second mortgage on that house. So usually your asset's tied to a debt. Your cars, a lot of people have a loan for their vehicle. And there's really only so many tools we have to help you in a divorce address your debt that's tied to it.
Yeah.
And I want to highlight kind of the three options we have. The easiest way to have a clean cut of debt that's tied to an asset is sell that asset.
Right.
And hopefully you're selling it for more than the debt you have. But that's the cleanest way to say, I have no financial ties to this asset or this person any longer.
Well, and I think that is how the joke that you told at the beginning kind of works, because not everybody, but a lot of people, their house is their asset. And like you said, with assets being tied to debts, and the best thing to do is get rid of debt when you're getting divorced, and you do that with the house.
Right.
And it's not for everybody. It's not the only thing to do, but a lot of people, that's because your marriage, you're building a life together, and a home is the one, the main thing that you want to build a family.
Right.
It's a place to be. So,
but with that said, having an attorney just tell you, because it's simple, sell your house, usually doesn't meet the goals of the client.
Right.
Most people are like, hey, I like my house. I want to keep my house. My children are accustomed to this house. I've raised my kids here. And so then we have to look at other options, and that is probably refinancing. If you have a debt associated and both names are on this debt, you're going to have to look into, can you refinance? And here at our firm, we network with trusted professionals that can help you determine, under the very specific circumstance of divorce, if you can qualify to refinance. And it's my understanding that there's packages out there specific to people going through a divorce to refinance their house that they might not have known about. And so we can always give those referrals to trusted people that can do a financial analysis and help you learn what your options are to try to meet that goal of, can you keep your house?
Yeah.
And then, is it really financially responsible for you to keep your house? So if we're dealing with debt, and in this illustration, it's the house, we've got sell it and split the costs. However, the outcome of your divorce says you have to split the costs, or not the costs, but the equity that you earn.
Right.
Refinance any debt associated with that house. See if you can even keep the house. But then there's that other part of, you have to be able to give the equity or the value that your spouse also has accumulated in the house. So it can be really tricky getting rid of debt if you don't want to sell the house, because you're going to have to refinance most likely sufficient to buy out your spouse. Meaning, if they get $30,000 because that's their 50% equity share in the house, you either need to come up with $30,000 in other assets to offset that, or you have to refinance for enough money to be able to provide your future ex-spouse their equity interest in the house. So it can get really complicated, but it's not something that we can't overcome. And we have a lot of people that will help.
I mean, we're learning every day. There are products out there, from professionals that we know, that address that situation.
Yep.
You know?
And in a future episode, we're going to have a mortgage broker and financial professional come and share what those products are or options are. So stay tuned. Hopefully next month we'll be able to have a podcast devoted entirely to house refinance, mortgage, and also a little bit just about financial planning to see if it's in your best interest to keep that house. But going back to some options for debt, even the illustration of a car or a vehicle, selling it's always there. Refinancing the loan is always there. Finding a different way to keep it and buy out that asset interest. If you've got another account that you can say, I'm going to keep my car, but I'll give you $5,000 for it, then we will ensure your documents, your backup plan says what exactly needs to happen, what documents need to be signed to have the other person release any, claim they have in your house, in your car. So, other ways that you can reduce debt, if at all possible, is using marital assets to pay off your debt. What are your thoughts of people taking maybe their hard-earned money from bank accounts and just paying off their debt? Do you think that that's a good idea upon divorce?
Yeah. Upon divorce, it is, I think it's always beneficial. Let me word it a different way. It's always beneficial to reduce debt. However, depending on your financial situation and everything, and debt is not always bad, right? As we talked about, like having a mortgage on a house, like that's not a bad debt. It's a debt, but you have a house also, right? So
it's building your credit score. It's
not. It doesn't equal bad, right? Debt doesn't always equal bad. However, when you're getting divorced, you're taking your hard-earned money, but you're betting your situation for the future, right? Because you've been in a relationship, that has broken down, and so there's all that emotional aspect of the breakdown of a relationship, and and one thing we like to do, right, is get people into their new phase of life and in the best way possible. Mm-hmm. So yeah, I'm not, in a situation of divorce, I mean, I think it's always better to, minimize debt that you have coming out on the other end. Mm-hmm. But again, it all ties together, and that's why, people look to us, look to you, for guidance mm-hmm. on the best way to do that.
And let's talk about credit card debt.
Yep.
Lots of families, especially these days, are racking up a lot of credit card debt in order to just maintain either their standard of living or to be able to provide things for their children or themselves. And they often come to us and say, I want to get divorced, but we have a number of cards out there with some high balances on it. Mm-hmm. What do we do?
Right.
Now, that can get complicated because it's not like a house where we can say we'll work with our trusted appraiser to tell you what the value is, or our trusted real estate agent so that you can sell it for the most that you can get to pay off debt. It's not like a car with, a loan that is just tied to that car. It is a credit card that has been used for 1,000 different reasons.
Right.
And so that can make your divorce a little bit more complicated because you either can agree, the $20,000, if it's that, was accumulated during our marriage. It was customary that we would, have this balance. It was all for the, marital expenses, house expenses, children expenses, and we'll find, money somewhere to pay this off. That's an easy way to approach it, and that can take a long time to come to that realization that that's the realistic outcome of that. Other families might say, I'm surprised after running my credit report or after getting financial disclosures, I'm surprised to learn that there's a credit card out there with $20,000 on it. I want to go through and see what all of those charges are for. So there's more analysis, I think, that goes into the credit card if somebody is objecting to the balance or objecting to what it was used for.
Sure.
Right?
Sure.
So if you have high credit cards, I would say start looking through the itemization of the transactions. If these are all customary for maintaining your house or other activities or things of that nature, most likely we're going to have to find a way to either resolve that or allocate that debt to one party, or say over a certain amount of time you have to pay off this debt because it's a joint debt. But there's homework to be done if you have credit card debt to really look at those transactions, make sure that you're either comfortable with them, or if you have an objection, then we need to analyze that further and see, what do we do? Mm-hmm. Does the objection mean it's attributable to the other person that made that surprising transaction that isn't related to your family or to maintaining your home or other obligations? But I find most divorces, they might end up selling their house and then using equity to pay off credit cards.
Yeah.
That happens a lot.
And I think that that's what we, in the business tend to look at first, right, is the house. What equity is in the house? Because that fixes, for lack of a better term, a lot of the debt issues, when going through a divorce. I was thinking another one that's not as clear, however, people, especially these days, again, I don't think back in the day it wasn't as, it was more individually based, but 401ks, retirement accounts, a lot of people have them. Sometimes they're big, sometimes they're not that big, but it's kind of, I think, one of the only other assets that
is usually larger for a family.
Right.
Okay.
And it's not the same. It's not like, because there's tax laws and everything that's involved in that, and it's not easy. However, right, when we're looking at our assets and our debt, right, we have to look for everything that fixes those.
Well, right. And so not only is it an asset, but it could be a debt. Right. Because a lot of people are taking loans against their retirement plans.
That's true.
Either to refinance in a sense, or to eliminate debt. And we have to be very careful because we're not retirement plan specialists. And depending on the type of loan you took out, you might have only a short amount of time to pay that back. And then you have, like you said, taxes and fees and other things attributable to it. But it is an option. Right. And I think the important lesson is that if you're divorcing with a lot of debt, whether that be house, car, credit card, retirement loans, other forms of debts, that it would be really beneficial if you work with a certified divorce financial planner or your CPA or a financial professional that can come up with a good financial plan for how can you eliminate debt. Because it's really easy for us to say, we're just going to use marital assets to eliminate debt. But that might not meet all of our clients' goals.
Right. You're right.
There's emotional attachments to certain things. And sometimes people say it might not make the best financial sense, but I really want to keep that asset.
Yep.
And then what are my options? So, having that team approach, a lot of people balk at it, but in the long run, it can save you money because it's somebody that can tell you, yeah, you can do it and here's some options. Or, if you don't want to use a financial planner to help you with that, it might cost you more in the end because you might have to just keep that asset, keep the debt, and then you're left after divorce having to manage all of these things without any further assistance.
Yeah.
And that's not my hope for any client. I don't want that. We here want everybody to enter the next phase of their life with the tools that can help them succeed.
Right.
And if you're divorcing with a lot of debt, there are options out there. However, if you have particular goals about what you want to keep in a divorce or what you can't eliminate, if you can't pay off debt, it'd be a really, really good idea to sit down and work with a financial professional to come up with an appropriate plan to meet your goals. We as lawyers and paralegals, we can give you guidance. We can help you, but our main role is to get you divorced, and our main role is to make sure that any of the documents represent your agreement or represent the outcome accurately, but we're not really there to implement everything after the divorce.
Right.
And having a relationship with a financial professional helps your divorce and helps you after, so that you can restore your finances after you go through a divorce, right?
Yeah. Right.
So another option that people have is, if you find a way to pay off all of your debt, to then close all of those credit cards or close any account that you may have shared with your spouse. What do you think about that? Just trying to eliminate everything and close every account. It leaves you with a clean cut of liability, right? I mean, you're no longer liable or sharing anything with your spouse. But what do you think about just closing joint credit cards, closing joint bank accounts?
Well, I think that, again, working with a professional, is probably the best approach to figuring out what is good and what is not good. Because unfortunately today everything works on credit reports. And that's why we ask for them in the beginning. Because there's implications to everything that you do. So if just a random situation of you're getting divorced, and you've gone through the process, you've sold the house, everything's settled, this and that, we paid off all our credit cards and all this, so now you're going to buy a new house, right? And so it's a completely different. The credit card, the mortgage companies are going to go back and look at your credit, and they're going to see, if I closed all of my accounts 30 days ago, your credit score takes hits on, it goes up and down and up and down, and those are negative factors that, can be talked through, and maybe that's a possibility. Not being a credit professional, that could be a possibility. Is we closed all these accounts, but here's why. And mortgage companies, they're, for the most part, they have their rules, but
they have certain exemptions
they can
for
talk,
divorce.
They can talk through and stuff. So every situation, but it's got to be a matter of preference and what is your future, what does your short-term, midterm future look like? Because while yes, closing accounts affects your credit report, it doesn't affect it forever. And it's not the worst thing, right? It's a negative impact, but it's not keeping debt, that you can't pay for, or not paying your debt, right? Like not making monthly payments is worse than closing accounts, right? Mm-hmm. So there's give and takes, and that's what professionals come for. I think, it depends on how the divorce goes, right? If two people really don't like each other, they don't want nothing to do with that person ever again, they'll get rid of everything. And
closing accounts is probably the best option at that point.
Anything to get somebody's name you don't want to see anymore, out of it is, that's how you do it. Mm-hmm. Right? You refinance, you close accounts, you make everything your own again. So But I would say just closing accounts is not always the best option.
Right, right. And, a lot of financial planners that I talk to and trying to preserve your credit score so that you can qualify for getting a townhome, a condo, a new single family home, or just moving on. A lot of them do discuss, let's try to allocate debt to one party and have the marital settlement agreement reflect that the debt's attributable to that party, and both parties will cooperate with removing the name of the party that's not being allocated that account or that card. And so it does take some cooperation, but your backup plan is that you have a marital settlement agreement that spells out exactly what should happen. And that's an enforceable document. But the financial planners do tend to say, if we can keep accounts open, but know that we're still severing liability between the parties, that can at least help restore or keep a decent credit score. Mm-hmm. Divorce is going to hit your credit, I think, regardless. But there are options out there to try to minimize that negative effect.
Right. Right.
So, we've talked about some of the options you have about selling marital assets, refinancing debts associated with marital assets, making sure you're refinancing debt in your own name if you're keeping that debt, possibly closing any joint credit cards or joint debt that you might have with the other party. But what are the risks? What if you can't do that? What if you don't have marital assets to pay off debt? What if you don't have the ability to quickly remove somebody's name because they haven't paid their percentage of that debt that's owed? What are the risks? Well, it's as if you entered a contract with, another third party. If your ex-spouse defaults on the loan or stops paying it and your name's still on it, you go through the same process anybody else would about liability and your obligation to pay that debt. So there's a huge risk that unfortunately I think a lot of families have to take, is keeping their names on debts for a certain amount of time.
Yeah.
And what's your backup plan? Yeah. I think your backup plan at that point is, if you can't work it out or have the trust that you each will contribute towards that debt, your backup plan is your marital settlement agreement and the court being able to monitor and enforce anything that might happen if you default, or if the other party, not if you default, but if the other party defaults. If you spell it out in your marital settlement agreement that wife is supposed to get debt, and once the debt's paid off, then both names are off of that debt. If she defaults on it, the other spouse could go into court and say, there's a marital settlement agreement here that says this is her responsibility.
Yeah.
She didn't pay it. Perhaps I paid it to avoid legal action or avoid foreclosure. So guess what? Now in divorce court, I'm going to ask that she pay me back and she pay my legal fees. So it's a sticky process, but your backup plan is your marital settlement agreement, and your backup plan is the court being able to enforce and hopefully give you your attorney's fees if you're in the right. If you have to go back to court and clarify everybody's roles about a particular debt.
Yeah.
So making sure your marital settlement agreement is detailed with whatever option you have to take. If both of you have to stay on a debt, your marital settlement agreement needs to reflect that and reflect what happens if something goes wrong. Then, if we can, best option out there, try to use marital assets to eliminate as much debt as possible. And if that doesn't seem to work or can't work, I think working with a financial professional, even if it's for one session or two sessions, definitely worth your investment in the long run if you have certain goals that you want to meet that perhaps selling assets or using marital assets to get rid of debt can't accomplish.
Yeah.
All right, so I think, we've covered a lot about debt here. We're going to do it again in the future because it is a really big issue, especially these days with the difficult financial circumstances everybody is facing. We're going to highlight more financial issues down the road, whether that relates to what does a divorced financial professional do, what options do you have out there as they relate to real estate or a mortgage that you may have. So stay tuned. We'll have other professionals also joining us to give you information that should help you restore your finances and move on to a better chapter of your life.
Yeah.
Thanks for joining us.